Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, and joining me on the desk this afternoon, we have Jagdeesh Prakasam. He is the CEO of Qdeck.ai. Chris Englebert, founding partner and chief investment officer of Englebert Financial Advisors. Nate Lenz, co-founder and CEO of Concurrent, and Yelena Melamed, co-founder and head of product at Catchlight, to discuss how AI will help advisors scale their business platforms and provide the best experience for the next generation of investors. It is great to have everyone with us. Welcome to Trade Talks. Welcome to the Nasdaq Market Site. I want to go around the horn here. Jag, we'll start with you. Cerulli projects that wealth transfer through 2045 will total over $84 trillion. Is the industry equipped to serve this transfer and the new client demographic?
Yeah, thanks for having me over, Jill. So one of the biggest things in the wealth advisory space, as you see it, for the past 60 years, the clients that the wealth advisory space has serviced has pretty much remained somewhat the same or similar, but until now, where the biggest beneficiaries of this wealth transfer are a whole different generation of clients. They tend to be digital natives. They love self-service transaction models, and they like hyper-personalization, but not like in the way their parents liked it. They actually don't want to have a real conversation with an advisor in person. So given that being the situation, this is the generation, remember, that got ChatGPT to 1 million users in 5 days. Okay, so the wealth advisory space has the tools today. Luckily, they have the tools here, but it's going to be a question of how they adopt it and be able to service that clientele, because they're going to be the largest asset holders for the next 3 decades.
Mm-hmm. Chris, I mean, do you think the industry is there at this point to be able to serve them effectively?
No, we're not ready. First of all, you have to talk about advisor training for the new generation of advisors. Hopefully, the AI products will get people up to speed. But, to Jag's point, we have the opposite end of the spectrum. We have older clients who are, technology challenged that either don't trust or don't understand or don't know how to use. But then fast forward, we're going up to about once a month where we get an adult, child saying, hey, my mom and dad passed away. I've got this money now. How do I invest this money? What do I do? And to Jag's point, they want to be engaged in much different ways. At our shop, we do a lot of videos. We send a video out a week because many people would rather watch a video than to talk to somebody on the phone or even text them. So, the industry is going to have to get up to speed quickly because this tsunami of assets is coming, and we need to get ready for it.
Yeah, and Nate, from the millennial perspective, do you think the industry is on board?
So I think the industry has always been somewhat handicapped when it comes to adopting new technologies, a lot of ways because of the regulatory environment that we operate in. When you look at the market share as to where advisors are currently doing business, it's still dominated by the wirehouses, right? And so what you end up with are these platforms that are tied to legacy systems that are slow to adopt. And so I think that, what things will have to change. You see a lot of advisors moving independent, but one other major issue that we're facing is this talent gap that we have. Right, that's a huge factor here. There's not a lot of folks in the industry that look like me, right? No offense, Chris. There's a lot of folks that look like you, but at the end of the day, if we can't learn how to develop talent, it's not going to matter what technology exists because we're not going to be equipped to serve that generation.
Right. It's almost the chicken before the egg argument. But Yelena, you brought up a really interesting point that clients are looking for more from their advisors and like almost through the lens of having service providers like Apple. I thought that was an interesting thing that you noted.
So I think it's interesting, regardless of what clients look like, in order to serve them, I think we all expect a more personalized experience. We are taught by Apple and Googles of the world to really expect something like that. And so really it's the personalization and the tailoring of the service and the engagement that will get the next investor to come in and do business with an advisor.
Right. Well, let's talk about AI, Yelena, moving forward. How will it help advisors to scale their experience, to scale their platforms?
I'll stay on the topic of personalization and tailoring. So leaning on data and understanding where you've had successes to, let's say, convert a net new customer, and repeating and learning and leaning on that learning to really embed it into the service that you're looking to provide will get advisors to be faster and more efficient so that time, that savings of time can actually be used in client service. As a lead matures to a customer, continuing to tailor and lean on the data to create a personalized engagement, personalized service, personalized experience will really create an engagement and a partnership that investors seek.
I want to jump on what Yelena said because one way you scale your business is you create a niche. and we have a huge law enforcement niche. We're known as the experts, et cetera. And so what I'm looking for AI to do is to help me deliver the information that Englebert Financial Advisors specializes in law enforcement. And so the first time a police officer says, hey, I'm thinking about this, they pick up the phone to us. So you're exactly right. Getting that niche, dominating that niche is a real fast way to grow your business and get it to scale. And that's why we're looking for the tools of AI to help us do that.
Well, in addition to engaging with clients, I think another major advantage that we've seen is the ability for AI to build capacity, right? And we look at the different technologies that are out there that allow us to read estate planning documents and tax documents very quickly. It creates capacity to enable us to serve more clients, right? Which I think will be necessary, especially if we're trying to engage with this generation of clients now. I think the statistic was, 10 trillion by
2025.
By 2025, but 84 trillion by 2045. Even though the assets are coming by 2045, we need to be working with these clients now. They don't have meaningful assets, so we have to engage with them in other planning capacities, and that's where I think AI can play.
Yeah, I agree with Nate, because what's happening here is, just think about it. Many a times we think of the current set of advisors want to manage minimum of at least $500K to $1 million in account sizes. But the next generation that's going to be the beneficiary of this wealth transfer does not have that much of liquid, on an average, doesn't have that much of liquid assets to invest in the public markets. But by the wealth advisor adopting this AI, it actually democratizes access to good, sound wealth advice for them. Because right now they're stuck with, if you're below 500K, you're stuck with a bunch of robo-advisors who started after 2010, right? So here we go, but the wealth advisors have a deep level of investment experience. They've seen multiple market cycles, rising interest rate environments, falling interest rate environments, what have you, right? And they've managed to kind of handle much larger accounts through these different market cycles. I think by adopting AI now, wealth advisors can seamlessly manage a wide spectrum of assets across different clients. And this is a great way. That way it will also be profitable for them to manage a $100,000 account, and they don't need to wait for that $1 million mark.
Well, adding to that, you're right. Advisors will continue to serve a multitude of different personas, whether it be someone who is typically they're servicing or someone who is new and new in the money. So the ability to segment and really tailor to those services, but coach them, as you had mentioned, will be very important.
How is the industry managing lack of controls on data and compliance with suggested output? I mean, the fact of the matter is, to both of your points earlier, it is a regulated industry, and the technology evolves much quicker than legislation and regulation can, right? So again, it's this balance of, you have the product side, the business side, who wants to execute on this new technology, but then you also have to think about risk management and adhering to the strict regulations in the financial services space. How do you think, will the regulators be able to catch up with this?
I think they will, right? And I think, from our perspective, and we manage a platform of independent wealth managers, right? And they're all doing business in different ways, serving different client niches, like Chris mentioned. I think that, what you've seen historically, and the reason it's slow to adopt, is that typically firms just don't take action, right? The response is they're not going to evaluate, they're not going to implement it until it's ultimately well ahead of them. And so I think that we'll be slow to adopt it as an industry, but I do think firms that are operating independently, that have the ability and agency over what they're choosing from a technology offering, are going to be best equipped. And I think that'll create some distance between those firms and some of the incumbent firms that are ultimately not as equipped or ready to make that change.
Well, I want to follow up with what they're saying, because I'm in the field, as an RIA every day. And you have the custodians, and you have these different packages on top of the custodians. And for example, we use one package that allows us to manage held away assets at 401ks. Well, one of our other members of our team was at a conference, and they were going around the table, and a lot of advisors, it's fear of what's new. Well, we 2 years ago did a deep dive on this package. We dotted the I's, we crossed the T's. We're like, this is good. Their security system is really good. We had 3 conference calls on how they protected their client, et cetera. And I have to say, all of the packages that are coming out nowadays, they know that as an RIA, that's one of our major focuses is how are you securing the data of our clients? What's going to happen if there is a breach, who's going to be responsible? I mean, as a firm, we carry that insurance, but we are looking for those other applications to partner and make sure that they have that insurance too. So again, I think one of the problems in our industry as RIAs is the fear of the unknown. Like, hey, if I adapt this to help to scale, what's the worst thing that could happen? I'm like, wait a minute, why don't we change that narrative around and say, if we adapt this and scale, what's the best thing that's going to happen for both the client and our firm? And to Jag's point, I mean, you're as an RIA going to be able to manage so much more in assets for your clients, but then give them the experience that they're really looking for, whether it's a email marketing campaign that you're using a product for, whether it's a video, whether it's a portfolio that's being managed for them. It really has a lot of positive things, but again, sometimes in our industry, they always think what's the worst case instead of, wait, is this right and what can I do?
You make a really good point on the vetting. And so a lot of firms have invested tremendously into big data and have put a lot of controls over the last decade or so to make sure that that works for them and they understand where the data is going. I think this is really just an extension, right? Is how do I extend the controls I've put in place at my firm as I start to work with new partners and get the benefit of the efficiency that AI has delivered. The good news is that work has already been done, it's already paved the way. It is really about the vetting, it's really about understanding the confidentiality and security that these providers have, but also what business efficiencies they could offer. And to your point of how do I focus my objectives on what I'm looking for as a business, and at the same time do that in a secure, vetted way. So for example, sometimes that is also leaning on an AI provider. Another fellow Fidelity Labs incubated a solution, Safer, helps really compact the sales literature review process. There's still a human in the middle. Catchlight helps you prospect and prioritize and focus your outreach. But again, at the end, there's still human in the middle. That way, the compliance factor of that, you could still bring. It's vetting the vendor on one side, but also understanding what you should expect as results and how someone can validate those policies.
I think those are great points that you bring up because it's almost like, does AI become a catch-all, right? And so when we were talking about this off camera, it's like
right.
Blockchain in 2016 and 17, let's just throw blockchain somewhere in the comm story, right?
Yeah.
But thinking about your end goals, the benefits to your practice, it's not just, okay, let's just say we have AI within our practice. Like, don't create problems that don't need to be solved, right? Look to leverage these technologies to either I want to make my business more efficient, I want to use it to prospect better, I want to be able to communicate with my clients better. So like don't create problems that don't need to be solved just because you want AI in your practice.
Sure, absolutely.
In the wealth advisory space, we're not selling an iPhone or an Android phone or whatever, right? This is a solution where AI needs to make sense. Just using AI alone is not a reason for an investor to come and invest in you. But the reason is, what does it do for me? Because ultimately, you have to deliver returns. See, that's the only reason. They're not going to lose their money on sexy tech, right? This is what it is. But that's why it's extremely critical to see how you view AI, because it's only a co-pilot. You got to remember that every company today is a data company in my book. And now you use different set of technologies to harvest actionable insights. So if AI makes sense for you, great. For the financial wealth advisory space, it makes a lot of sense. But there are a lot of industries where you will see that, a data analytics, a statistical model is good enough, and that's all right, right? And the way we view the world is going forward, everybody in that next generation of investors is going to have an AI co-pilot access, whether it be healthcare, whether it be finance, what have you. And the advisors are going to have to provide that. That's one of the things that their investors will get. They'll say, hey, here is Englebert Advisors, and his clients are going to have a clone of Englebert's co-pilot that says that they have access to 24/7, that they can research or ask a question and then tag their advisor and say, hey, I'm really interested in this topic. Could you help me figure this out?
Well, and just to follow up, so like our website is video dominated, and we have some amazing statistics because people go to our website to learn from the content. And as an RIA, we get asked, for example, law enforcement, the same questions over and over and over again. I'm excited about this next generation of AI co-pilot because we have a tremendous wealth of knowledge. We wrote a book. We load that book into it becomes a Google on our website that they're asking like, hey, what happens when I retire? Or, hey, what should I do here? And it leverages my time, dramatically from that standpoint. And that's what we're trying to do as a senior advisor, leverage our time, and then as junior advisors, bring them in and bring them up to speed.
Sure.
So.
And I think, we talked a little bit about the training gap in our industry, right? And I do think that AI is going to shorten the learning curve for a lot of those younger advisors that are coming into the space. It's going to enable them to deliver a high level of planning competency very early on. What I don't think you'll be able to shorten the curve on is developing the empathy of working with the end client, right? And that's when you talk about co-piloting or in the human element of what's involved here. You won't be able to replace that. So I think there'll still be an apprenticeship path that's needed, but we'll be able to serve more clients, I think. And I do think that in spite of the fact that they have lower asset levels, we're also, I'm not buying into the fee compression conversation either. Right? I think that there's, younger clients, millennial generation, if they're getting high quality advice and we're able to deliver it efficiently, I don't think they're afraid to pay for that advice. So contrary to what others might think, I'm not a big believer that fee compression.
Oh, I agree, because look at, you got DoorDash, you have all the apps. They're willing to pay an upcharge to have chicken brought to them. Gee, you just inherited $500,000. Are you going to pay an upcharge to have talking to a real person? But by the same token, they do a tremendous amount of work behind the scenes before they come to you so that they're comfortable with the interaction.
Well, Jag, I thought you brought up a great term here, leveraging AI as insights, right? I mean, it's nice to be able to ask questions. What happens when I inherit money from my parents? How do I estate plan? How do I plan for a divorce or a new kid or something? Yeah. But I can't imagine people only wanting that in a robo type of experience where, okay, here's the basic information now. I want to call Chris and be like, Chris, I'm this particular age. My parents are looking to pass this over. I need very specific information. I live in New Jersey. I need help with my taxes, XYZ. Absolutely. I think that combination, so calling it insights and then being able to reach out to a physical advisor, I don't think that's going to change. And I'm a Gen Xer.
Yeah. So. No, I agree with you. That's not going to change. And I think to Nate's point here, I think it's not about paying a little extra fee, because at the end of the day, it's most people, of course, if you're a Wall Street trader, I'm a former Wall Street trader, and I can tell you maybe I like to make a few trades, manage my own portfolio, but having said that, for most people, my wife is a physician, and I can tell you, she doesn't even know the login for her retirement accounts, right? For someone like her, she does her thing, and she wants her financial advisor to manage that portion. It's not, majority of the world would benefit from that. There is a very small portion of the world that says, okay, I want to get hands-on with this thing.
Yeah, well, that was like to your point before, robo-advisors really since 2010, the market only went up one way. There's only liquidity in the system. What we've experienced over the past 2 to 3 years, that's when you want to be able to call Chris, I'm not used to my portfolio going like this when it's only went like that. And I think, honestly, we've spoken about this in other conversations, that almost this needed to happen so that investors can be re-educated in another way. And that's when you see the value of dealing with an advisor.
Well, and I also think what your product is that you guys have, and again, knowing your client, it all comes back to know your client. So if you know your client, there are clients that, hey, market's going up, they're happy, market's going down, they're sad. Well, okay, here's the investments that you need to be in, and here's your niche. Like, for example, our clientele has not big, but they have substantial defined benefit pensions. They can afford to take some more risk versus somebody that works in the corporate world that may have a big 401k rollover, but is like, gee, this is what my assets are. So again, AI is kind of being sold as this catch-all panacea that it's going to, solve every problem out there. To me, it's another tool to increase efficiency, increase portfolio returns, increase client engagement, customize it, and really solve some of the problems that I, as an RIA, is facing, but ultimately serve the client better from an end standpoint.
Yeah, I think these are all amazing points, and we will end it on that high note as we are out of time here. We appreciate everyone's insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.